What is going on, guys? Let me know if you can hear me. Let me know if you can hear me. Cool. What is going on, guys? Sorry for being a little bit late. I was trying to set up the secondary monitor, which is conking out at the moment, but that's fine. All right, so let's talk about the CPI. I think that the tweet by Liz Ann Saunders from Charles Schwab, she summed it up really well in her tweet, but the summary is that the CPI came in lower than expected. Obviously, 8.5% isn't really anything to celebrate, but when you were expecting 8.7%, 8.5% seems like somewhat of a relief. And then, so it was 8.5% versus the estimated 8.7%. Obviously, last month, you guys know that it came in at 9.1%. So, obviously a lot lower than expected. The core CPI came in at 5.9% versus 6.1%, so also 0.2% less in the core CPI as well. Now, if you look at the effect that it's having, so let's talk about the effect that it's having on the markets at the moment. So if you look at the bond yields, you'll see that the bond yields all tanked. Now, the reason this happens is because this is tied to interest rates, right? When bond investors are not expecting interest rates to rise aggressively, they want to take advantage of the interest rates that we currently have, because they see those interest rates as potentially being the highest ones that we'll have at the moment, or at least for the short term. So they want to take advantage of those interest rates if the Fed is not going to be raising aggressively in the coming months. And the reason that there's thinking that the Fed won't be raising aggressively is because the CPI came in lower than expected, right? So let me just, I'm just gonna try to fix my screen real quick. 1 second. Because the CPI came in lower than expected, now there's thinking that the Fed won't have to raise aggressively. Obviously, there is somewhat of a dichotomy here, because we got the jobs report, and the jobs report was a lot higher than expected. So the expectation there was that the Fed would potentially have to raise a lot more aggressively after the jobs report came out, and now we got a lower than expected CPI, and so the thinking is that the Fed is not going to have to raise so aggressively, right? So it is kind of this back and forth dichotomy here between a strong economy and between inflation easing, or between a slowing economy and between inflation easing, right? So this obviously is causing a short-term rally, because, as we said in previous videos, if the expectation is that if the CPI actual CPI numbers come in lower than the expectation, then we will likely get a short-term rally because of it. Now, inflation is still really high, don't get me wrong, but I think the market is banking on the fact, or trying to bank on the fact, that it is slowing down, and so we can potentially see an end to the high inflation problem. However, dealing with almost double-digit inflation has never been something that has just gone away that easily, with really, I would say, with really timid rate hikes, right? So the 75 basis point rate hike, the back-to-back 75 basis point rate hikes, putting us right now at a rate of 225 to 250 basis points, is not going to be enough to fight double-digit inflation. And what I was saying about the Fed's expectation not to get aggressive, if you followed my video from 2 days ago, you'll see that this here on the right was at almost 68%, meaning that there was the market was pricing in a 68% chance that the Fed would do a 75 to 100 basis point rate hike. Now you're seeing it here at a 25 to 50 basis point, a 50 to 75 basis point rate hike on the left. Now, the Fed funds futures bettors are betting that the Fed only does 50 to 75, not 75 to 100, because of the fact that inflation appears to be slowing down. So I want to get to your guys' questions. So let me check what you guys are saying on the chat, and we'll get into that. So let's see. Where's my chat box? All right. Let's get into the chat real quick. Oops. All right. All right, let's see. Good morning, Adam, Caroline, HMBM, Craig, James, JPK, Doc, Livonia, Igor, Roman. Roman says, why don't you start live video earlier when the CPI comes out? Kind of late, now everyone knows. Well, because a lot of people on the West Coast are sleeping at 5:30 a.m. That's why. All right. He should come out for a mic check, get the crowd fire up, then leave. Oh, you guys are talking about why I was late? Yeah. No, I was just trying to set up this dual monitor here with the iPad being the dual monitor, and it was freezing up on me. So, all right, bro, you look very tired. I think you need a vacation. I think that is the lighting. People say this, you know, off and on, but no, I'm currently in Italy. I don't need a vacation. Hi Z from Korea. What's going on, Volka? Hey, sorry to bring this up, but any update on the Roblox puts? Yeah, you should have sold them in the morning if you still held them when they were still up, because the price of Roblox was what, 38 and change, or 39 after hours, and then started creeping up, and I think it opened at like 42-ish. So they were up. I don't know, you know, why you'd be holding them unless you're trying to gamble. Hey, what's going on, Katya? How you doing? Do you think today's 2% jump in the QQQ will fall back? Yeah, so at Turin, I'm going to go over the market charts right now. By the way, if you guys are on the chat, or I mean on the stream, leave a thumbs up so that other people can find the chat. But yes, I'm going to go over the charts in a moment, and show you what happened the last few CPIs as well. 5 to 6% inflation at least for a decade. I don't know how you're concluding that, Sam Beckingsale. It just sounds like a lot of anecdotal doom and gloom, honestly. All right, let's see. Hi Z, what do you think? Is it only a bear market rally, or is the bear market over? So there's a reason that I don't think that the bear market is over, and that is because if you look at the previous bear markets, every single bear market, you know, when the stock market officially hits, and I'm trying to pull this up for you, but when the stock market officially hits a bear market, we never have not seen a VIX that had, we've never not seen the VIX cross above 40, above 45. I'm gonna pull this up for you, one second. Okay, so if you take a look at this, in the S&P 500, right? Every single bear market in the S&P 500 has resulted in a VIX that has crossed over 45, right? If the S&P has bottomed, if this is the bottom of the S&P 500, then this will be the first time in history that we did not get a VIX above 45. And for those that are new to the markets, the VIX is just a volatility index. It is basically a fear gauge, and this is based on the way that S&P 500 options traders are trading. So if they're hedging a lot, if they're expecting the market to drop, and they're buying a lot of puts, then you'll usually see the VIX go up. So we've never seen in any bear market in history, since the VIX was in existence, we've never seen the VIX not go above 45 in a bear market, right? Now, this tweet was sent out June 7th. It's obviously August 10th. And the markets were in already at an inflection point. So if you follow this channel, you know that we've been tracking the S&P 500 and the NASDAQ, and I'll show it to you here. And you'll see exactly what I'm talking about. So we have this fractal pattern here, right? The same pattern that we saw back in February and March. But we're right at resistance here. So, we have to think of what catalysts are left to drive the markets further up from here, significantly further up from here, right? August is usually the worst month in a midterm election year, and we are in August right now. And it usually coincides with the mega cap earnings also, being over and done with. So what catalyst do we have to get significantly above to new all-time highs? I do think that we can get to, because of the euphoria from inflation finally going down, we can get to the 4,300 level on the S&P 500, right? And if we look at the NASDAQ, which is still in a bear market, I think the NASDAQ looks like it is topping out here as well. There is resistance level on the triple Qs at around 330. But there's it's going to have to prove a lot to get over this hump, because 8.5% inflation versus 8.7%, the economists were already expecting inflation to drop from 9.1% to 8.7%. So it's not like they weren't expecting a drop, and we did get 0.2% better. Is that enough after a drop in inflation was already priced in? Is that enough to get over the hump, right? Is that enough to break into new all-time highs? Without any other catalyst, I would say no. And we have to take a look at what other earnings are coming out. I know that we have Home Depot and Walmart, some of the other big retailers, and retail will be a major focus aside from the mega cap tech, which those earnings are already done with. Retail will be a heavy focus because of some of the things that Michael Burry talked about with the bullwhip effect, right? Will we have retailers stocking up inventory that they can't offload? And what effect will that have on the economy? So, very tough to say whether we'll get a significant pullback or not. History tells you that we do have to get a significant pullback so that the VIX can go above 45, right? History says that. But obviously, we have outliers for every data set. It doesn't mean that the market has to act like that, and nobody's Nostradamus. So nobody can really tell you. I just personally, from a macroeconomic standpoint, aside from the Fed, the actual FOMC meeting in September 21st, there aren't really any catalysts between now and then, and most of the mega cap earnings are done with. And this rally here that we saw from the bottom on June 17th, a lot of that was due to the not so terrible earnings and guidance from the mega caps. They didn't give great earnings, and they didn't give great guidance either. But it was decent enough to, cause a short-term bear market rally, similar to what we had back in March. So that's a very hard question to answer. Actually, impossible question to answer. But we are at resistance now. This is an inflection point. So for those of you that are thinking of buying stocks, to me, this is a no buy zone, right? I did send out purchases back in May once we hit a bear market, because every time we hit a bear market or recession, I make a habit of buying. But and I did sell cash secured puts there as well. A lot of you that are in the Traveling Trader Academy are familiar with that and have done that as well. But right now, to me, this is a no buy zone. Like, this is the time to buy is not right at resistance. You want to make the market prove that it either has the ability to get over the hump, or that it is going to find resistance here and tank, right? So once we're at an inflection point, that is not the time to buy stocks. You looking tired, Padam says. Well, currently I'm chilling in Italy. I was on a boat all weekend. I don't know. Maybe you look tired. I'm living life. I'm fine. Don't worry about me. All right, thoughts on Rivian stock? They report earnings soon. By soon, you mean tonight? I think Rivian reports tonight. Let me see. August 11th. So they report tomorrow. Yeah, I probably will not play this until tomorrow, honestly. But I'll see what's up. I want to look at what the IV looks like. I want to look at whether there's even liquidity in options. I don't buy options on low liquidity stocks, right? Jacob says, where in Italy are you? I'm in Sardinia. Did we beat or miss? Beat or miss what? Not sure what you're talking about. Great video as always. Thank you, Luis. Will we reach new bottom again? I just talked about this. Yeah, because I have some cash on the sidelines. Was wondering if I should wait or invest now. This is the absolute worst time to invest. Again, if you were going to invest, you should invest before on the way down. Now that we've rallied, what, 13% in the span of a month, a little over a month maybe, why would you buy at resistance? That does not make sense to me. How did you find the resistance level for the triple Qs? With my eyes. What is your average price of Tesla? You mean my cost basis? It's under $100. It's my birthday. Thanks for the vid. Happy birthday, David. Hopefully you get something nice. Do you expect a bullish rally in 2022? Or will be rally in January 2023? I think that if the Fed does pivot or soften in September, yeah, I mean, we're going to all-time highs, especially after the election, for sure. The Fed drives a lot of what's going on with the market. Treasury 10-year, 2-year is still negative. Yes. Okay. So this is something I wanted to talk about because we have the 10-year and 2-year, right? The one that really signals a recession that we've been tracking loosely, I would say, for the last year is the 10-year 3-month. Now, the 10-year 3-month, so the 10-year 2-year is usually hits first. The inversion of the 10-year 2-year yield curve usually hits first, and that is the first sign that, hey, we might be on the precipice of a recession, right? But the death knell, i.e., when we actually fall into a recession, doesn't usually happen until the 10-year 3-month inverts. And once the 10-year 3-month inverts, that is usually when we are very close to recession status. Now, I actually did not pay attention to this for, I would say, about a month because we were so far away from inversion that I was like, oh, okay, this is not going to happen for a while. And I took a look at it yesterday just by chance, and I saw how close we were to inverting. So currently we sit at 0.13. 0 or below means the yield curve has inverted. Now, for those of you that aren't familiar with the bond market is a lot bigger than the stock market. The bond market currently sits at around $23 trillion in market cap. About what, 30 to 40% bigger than the stock market, which is crazy. And the bond market usually does a much better job of signaling economic events, whether we're talking about economic growth or economic turmoil. So the reason that yield curves invert is when investors pour heavily into long-term bonds and not into short-term bonds, right? So, or short-term treasuries. So, the reason that they wouldn't pour heavily into short-term treasuries is because if bond investors are expecting long-term turmoil, or if they're expecting the Fed to ease up due to recessionary fears in the long term, then they're going to want to take advantage of the yields at the moment, right? So what they do is they go out and invest heavily into long-term bonds because they want to lock up those yields for, say, 10 years. Now, what happens when you invest heavily into a treasury? Well, the yield of the treasury drops as people pour into it, right? So that is why the 10-year continues to drop as investors are investing heavily to try to take advantage of the yields that exist currently. And they're not buying shorter term treasuries, 3 months, 6 months, etc., because they don't care about the short-term gains. They want to lock up that yield for 10 years. So that is why right before recessions, you tend to see yield curves invert, because bond investors are basically signaling that, hey, the economy looks fucked for a while, and the Fed is going to have to ease up, meaning lower interest rates, which means lower yields. So let me go ahead and take advantage of these yields now and pour into these long-term bonds. I don't give a shit about the short-term bonds, right? Or the short-term treasuries. So that's why, and when folks don't buy treasuries in general, the yields start going up because they're trying to attract investors. So right now you can get a 3-month treasury for the same yield that you would get a 10-year treasury for, because of how much bond investors have been pouring into longer term bonds versus the shorter term ones, right? And if you get, anyone can invest in treasuries, by the way. Just go to Treasury Direct .gov or .org. Just Google Treasury Direct, and it's the Treasury Direct site. Open up an account with your social security number, and you can buy treasuries that way. So the 10-year treasury currently is paying out, I just looked at this. The 3-month treasury is currently paying out a yield of almost 2.6%. And if you look at the 10-year yield, it's 2.7%. So very close between the 10-year and the 3-month, right? But if you were interested in short-term or long-term treasuries, and you want to lock up some of your money for some guaranteed interest, then go to the Treasury Direct website. The 3-year is currently paying out 3%, and the 1-year is currently paying out 3.2%. So there you go. Take advantage of that if you are looking for more fixed income assets, and you have cash on the sidelines, and you don't really want your cash to just get burned up by inflation, and you don't know what to do with it. So hopefully that explains the yield curve. But yes, the 10-year and 3-month is almost inverting, and this has inverted before every single recession. You could see the one here before the COVID crash of 2020. So we're very close to inverting on the 10-year 3-month, which is something that again, I mean, just going back a month, I was like, oh, we're so far away from that, I don't need to look at that. But yeah. Let's see. You went over Amsterdam to Italy. Not sure what you're talking about. I didn't go to Amsterdam. All right. Let's see. Thanks for taking the time to share your thoughts with us. 10 and 3-month almost there, says Catherine Wolfer. Yes. Can you please share your current portfolio update in the group? Sure. I heard that island's water is super clear. Yes, in Sardinia, the water is really, really clear, very clear. You can see right down to the bottom. Honestly, like, it doesn't even matter how deep the water is. Beat CPI data. Yeah, we came in a little better than expected. 8.5% year over year versus 8.7% consensus. Just keep buying a little bit is better than buying a lot. I mean, I don't make a habit of buying at resistance, honestly. I think he meant that you didn't visit Amsterdam and went straight to Italy. Probably. One more leg down to scare everybody. Who's gonna scare everybody? I mean, again, if the Fed, eases up in September, I think we go straight to all-time highs. Honestly. Come to Dubai, it's super hot here. I know, I was there last summer. What happened, blah, 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 to the 10K portfolio? Oh, you mean the one that I was about to start, the 100K portfolio? I didn't start it yet, but I'll let you know. Are you going to Qatar World Cup? I was looking at that, but I'm not sure. It feels weird having a World Cup in winter, honestly. All right, what about the 2-year, 3-month? After this crosses, a crash is imminent. I think you're confusing a recession and a market crash. A recession is an economic term. A crash is a stock market term. You can have a recession without a crash. So, yeah. Any other catalyst that can turn the stock market? Doc says. No. I don't know what you mean by turn the stock market, but there aren't many catalysts here besides besides the Fed meeting in September. So I can easily see some short-term volatility. There can be a drop. There can be, nobody knows, but there aren't really any catalysts here. You could obviously see a lot of sideways trading up until September. A lot of up and down choppy movement until September. It doesn't have to be straight up or down. But today, certainly the stock market did really like where we are at. Let's take a look at the futures, or sorry, at the indices. Nasdaq up 2, S&P 1.6, the Dow's up 1.5. What does the VIX look like? Did anybody take a look at the VIX? I'll be very interested to see if the VIX. Okay, so the VIX tanked 6% today. It's down at around 20. That's crazy. So the VIX all of 2022 hasn't been below 20, except for, I think, one time, which was the end of March, beginning of April. And that was after that rally that looks just like this one, right? This rally here. So right around here, the VIX touched below 20. And then obviously the market started dumping again and the VIX went up. So, I mean, if you're looking to hedge here, VIX calls would be apt, not as a main position, but definitely as a hedge, in my opinion. Yeah, we only touched below 20 once, and it was right at the end of that rally. So looking like very similar behavior here. Oh, I apologize. So January, the first week of January, briefly, we were below 20. But after January, when the market started tanking and fell into a bear market, that is when the VIX started rising. And then at the end of that rally, the VIX hit the lowest point below 20 this year. So, once we get to, I mean, at the 20 mark, I think long dated VIX calls as a hedge might be apt here. So Mexico winning the World Cup this year. I don't think their team is good enough to win it, but I do love the Mexican team. Thank you for your video. Love learning from you. Appreciate you, Joe. Do you think Tesla will drop after split? Yes, I do think Tesla will drop after the split, just like every other major stock drops after a split. And unfortunately, FOMO buyers are going to be buying that day, while as the smart money is going to be selling that day. So do you think shorting the TQQQ now? I don't short TQQQ. So no, I mean, I would either trade it using futures by selling futures contracts or buying puts. And by the way, if you guys want access to all that stuff, the link is in the description below. We closed the open signups, right? The regular signups. So you have to actually apply to sign up, but click the link if you do want to apply. Sold out of my long positions and sold a bunch of 395 SPY puts expiring next week to get back into my positions if it gets that low. Cool. I know recession and crash. Look at the history of 2-year, 3-month. A stock market crash happens within 1 month according to history, not often talked about. I will definitely look at that. Thank you, JF. I will look at that data point. Since September is usually a month where big hedge funds take profits, do you see that happening this year? Ivan, I talked about how August is usually the worst month during a midterm election year. So yeah. Why buy puts instead of sell puts? Abram, what are you talking about, my man? What do you mean why buy puts instead of sell puts? That's the exact opposite order. I don't understand the question. Like, what are you trying to do here? And by the way, when the market hits, when the market hits a low or a bottom, you can sell puts on stocks that you want to own. For those of you that are familiar with the channel, you know that we've done this on the QQQ, we've done this on Tesla, we've done this on the SPY, we've done this on Microsoft, we've done this on a bunch of other stocks. So I do like selling puts. I just don't understand what you mean about buying and selling. Why buy puts when you can sell them? It's an exact opposite order. So I guess it depends on what you're trying to achieve. And I wasn't saying buying puts. I was saying buying calls on the VIX. So yeah, but For those of you that were in the Discord during the alerts, this is what I'm talking about. So these were all of our cash secure puts here. This is, or some of our cash secure puts: Apple, Microsoft, Triple Qs, Tesla, etc. And we closed these out for profit 2 weeks ago, I would say, or maybe it was last week. I can't remember now. But yeah, the cool thing about cash secure puts is you can close them out early. Market is now in buy dips mode. I don't think so, man. The market is at resistance. So yes, I mean, when the market dips heavily, you want to buy, but this right here is right at resistance. And this is a very non-optimal area to buy. Either you buy on the way down, or you wait to see whether resistance gets smacks down the stock or not. Like, buying at resistance is not optimal at all. When you sell puts, don't you need the whole capital to buy 100 shares? Yes and no, Jackie, because you will be doing it with a margin account. So technically, you only really need 40%. It's going to be between 30 and 50%, depending on the stock, because each stock has different margin requirements. So it's going to be between 30 to 50% of the capital required to buy 100 shares. But you do need a margin account, and that margin will be held for sure. Have been buying dips in the Russell, which I think is the strongest. Cool. If you're gambling in the stock market, is it profitable? Not sure what that means. What do you think Bumble earnings going to be like? I don't know. Haven't looked at Bumble. You don't think it is buy dips is back? I don't know what that means. I'm 0% in the market. Should I go in at least 50%? If you go to Qatar, let me know. I'm going. You want to deploy 50% of your cash right at resistance? Why didn't you deploy it before? Like, what was wrong with the S&P being down 25%? What was wrong with Amazon being down 30% or Tesla being down 40%? Like, why would you deploy it now? Juan Hernandez, love your videos, bro. Love you too, Juan. Do you think about oil prices? Catherine, what does this mean? Do you think about oil prices? No idea. I feel like a lot of us retail traders have to stop doing the same thing over and expecting different results. Yes, you can apply this to anything in life. Is SPX daily chart showing reverse head and shoulders? No. Did you ever begin nibbling on stocks after the recession announcement? I remember you said you were waiting for the market to go back down, but never did. I sold cash secure puts and then started dollar cost averaging back in May, which was a little earlier than the bottom in June. I never expected to catch the bottom, and you should never. But no, again, for the millionth time this stream, buying right here at resistance is, to me, not optimal. Why would you wait this whole time and then buy here? I don't get it. Unless there's something you really want to own and you're like, hey, this is discount. Like, if you look at Google right now and you're like, Google is down. What is it down? If you're looking at Google and it's down 21% now, and if you're telling yourself, that to me is a good price, I don't care if it goes down further, fine. But if you're the type that's like, oh, I'm waiting to deploy my cash, now I'm going to deploy it at resistance. I mean, come on. Look at the indices. S&P, NASDAQ, and Russell. Russell's strongest upside, don't you think? I mean, if you mean strongest upside just because it has the most to go up, it doesn't mean that it's going to hit those prices. Being furthest away from the top doesn't mean that it has the strongest upside, right? Don't misconstrue those two things. Are you in Italy for work or vacation? I'm just chilling and working from here. So, as in, do you think they'll remain above 90 a barrel or continue to drop? Well, I think it goes on with what's going on. It has to do with what's going on with Russia, right? So if Russia just opened back up some of its pipelines to Europe, I do think that gas prices are going to go down are going to continue to go down, especially if there is slowed down demand for gas, right? But oil is definitely at a support point. So I was actually looking to buy oil futures off of the 300-day moving average here. Because if you look at, let's look at the crude oil futures 1 second. So if you look at CL bounces off the 300-day moving average. But I don't know that we get back to, you know, what was it on crude oil? 130 a barrel? I don't think we get back to that. All right. Let's see. You feeling full? You feeling bull or bear for the rest of the month? Best YouTuber, thanks for your content. Thank you, Nick, for that comment. I'm not really a bull or bear for the rest of the month. I believe we're at resistance and it is going to be choppy until the September meeting. And I do think that if the Fed eases up in September, then the market will keep going up heavily through, you know, between September and the September 21st and the end of the year. But between now and September 21st, I think it will be choppy for sure. The best investment ever. My option trading went to another level. My accounts are in the 6 figures. I owe you, big fat Cuban. Oh, what's up, Ridden Fingers? Are you talking about the Discord? Appreciate you, man. You've been killing it. I've been seeing your stuff in the Trade Wins channel. Definitely, you've been killing it, man. Love seeing the progression. Love seeing the learning as well. And love having you in there. You're a very pleasant person to have in the Discord. So thank you. Is Tesla still a buy at these levels pre-split? See, not for me. Not for me. I think it's too expensive, and I think you could see a drop after it splits. You should absolutely visit Krakow. Yeah, I should. It has been the strongest conscious investing. Oh, you're saying relative to other indices. Maybe. Are there a particular stock that you do not currently have in your portfolio, but you see, this is a great question. Jobin Magduri. I love good questions. I love good questions. This is a great fucking question. Jobin Magduri says, is there any particular stock that you do not currently have in your portfolio, but that you are looking at adding to your portfolio? I love this question because you know that I most likely have all of the main culprits, right? Triple Qs, SPY, Microsoft, Amazon, Apple, Google, Tesla, you know, unfortunately, Facebook or Meta, you know, Johnson & Johnson, Berkshire Hathaway, Walmart, etc. So is there any stock that I don't have that I'm looking to add? So I was looking at Blackrock, if the price is right. Actually, let's take a look at Blackrock. So Blackrock is one that I definitely wanted to own on the dip for sure. And I missed the opportunity here at this double bottom. But Blackrock is definitely one of them. I don't own any Blackrock, but yeah, certainly I would like to. And then the other one is I do have a little bit of SOXL, but really it's not a significant investment. And I don't make a habit of investing heavily into leveraged ETFs. And I do have some SOXX, but once the SOXL gets back into a range, you know, in the mid to lower teens, if we can see a drop back in this channel, it's dropping because of one, lower chip demand, and two, a sell the news event with the Chip Act. But if this can get back into 15 or below, then I definitely would want to add a good amount of SOXL, SOXL, to my portfolio. So I would say SOXL, Blackrock is another one. But that is a very, very good question. And then I do own a little bit of Disney. I guess they do report earnings when tonight? Yeah, they report earnings tonight. Fuck. Disney's another one that I want for the long term, for sure. For sure. I'm gonna have to look at it after this, and if I do make a purchase, I will send it out in the academy. And I might want to play Disney earnings tonight. Rivian earnings are tomorrow. I made a killing on Rivian earnings last time. Rivian is, can be volatile, so I don't know what option strategy I'm gonna employ for that, but we'll see. What software is he using? You're talking about this? This here is TradingView. Get a free TradingView account. And then once you get really good, then get the paid TradingView account. Are we in a recession? According to the National Bureau of Economic Research, no. But according to every other recession that we've been in the past, yes, because we've had back-to-back negative GDPs. I think only one time we've had a recession without back-to-back negative GDPs, and ironically, I think it was 2001. We had negative GDP, then we reported positive GDP, and then back to negative GDP again. And we officially entered a recession, but I think that was the only one. All right, I'd love to be part of the group, Z. Abram says. Well, link is in the description. Would love to have you. So apply, talk to one of the ambassadors, and yeah, moon stocks. You look hungover. So does your mother. She looks hungover too. I just saw her. I'm 30 minutes behind, so forgive me if you talk about this later, but what about the fact that we keep printing money and passing spending bills? Wouldn't that lead to inflationary pressure soon? Kevin Dolan, I don't, what specific bills are you talking about that have been passed that lead to more printing of money? Certainly, yes. If you keep printing money, of course, it's going to lead to more inflationary pressures, but what bill are you talking about? What bill are you talking about specifically? Let me know and I'll take a look. All right, let's see. Chad Cooper, Apple, Tesla, Snapchat, and Meta are great. Chad, I disagree about Meta and Snapchat. I think Snapchat is really, really, really suffering from the popularity of TikTok. The fact that IG Reels, Instagram Reels, have also been really popular. Meta, I think, has turned into a value stock. So what I mean by that is Meta used to be a growth stock, and the difference between a value stock and a growth stock, there are quite a few differences, but the main difference is that a growth stock, just like the name suggests, expects to grow every year, right, or every quarter. And it's usually reserved for companies that have the ability to continue growing. Like you see these tech giants getting into different industries every single year and gobbling up more market share in different industries. And that's why, Apple, Amazon, they can continue to grow the revenues. Whereas a value stock is a stock that does really well, but isn't really expected to grow. And so you tend to see stocks like airlines, TV studios, etc., retailers, you tend to see them as value stocks because a retailer isn't expected to grow every single year. Their business model is kind of capped at a certain level, but it doesn't mean that the market doesn't expect them to be profitable, right? So Meta is turning into a value stock because it has a solid advertising business, but it no longer can prove to the market that it can grow because the metaverse pivot is very unproven. And Facebook is not going to see the fruits of the metaverse, if at all, but they're not going to see it for a long time, if at all, right? So, Facebook has turned into more of a value stock now because its advertising business is still a beast, but it isn't on a trajectory anymore where it can grow. So I disagree about Snapchat and I disagree about Meta. But yeah. All right, let's see. Mom comment. Z, I have too many questions. There's a tier where if you're approved, you get access to all of the courses, the Zoom calls, etc. So it's really different. But talk to an ambassador so that you can make sure that it's right for you, right? So, all right. Let's see. Is now a good time to buy? I already answered this, Heike. Go. Right now is not a good time to buy because, and not for me. If it is for you, fine. But I don't see the point of buying at resistance. I don't understand this. I don't understand why now you would wait to buy. Like, why didn't you buy here or here or here? Like, why are you waiting until the market goes all the way up and then slams into resistance, where now it has to make a decision between whether to continue rallying until the FOMC meeting in September or whether to continue some volatility? I don't understand why you want to buy here and why you didn't want to pull the trigger before, right? But it's up to you. Thoughts on selling cash secure puts? Terrible time, Jacob. Terrible time. You want to sell cash secure puts when the market is down, not when the market is rallying like crazy, because cash secure puts benefit or you get more money when the stock market is down. Because remember, the value of puts goes up when the market goes down. And since you are selling those puts, you want those puts to be as expensive as possible, right? And if you are selling cash secure puts when the market is up, this was a Tesla trade. That's not what I'm looking for. If you're selling cash secure puts when the market is up, then you are not getting enough for your puts. And then if the market goes down, you're going to be heavily down, right? You want to sell cash secure puts when the market is down, not when the market is up. I'm trying to find those cash secure puts for you to show you a screenshot of them. I think it was here. But yeah, I mean, when we sold these, if you look at when I sold these back when we first entered a bear market, somewhere around May. I can actually pull it up for you. Let me see. Let's see. Options. Puts. I sold these, I think, in May. I just want to be sure. Yeah, one second. Almost there. Yeah, around May 12th. Yeah, right here, May 12th, I sold these. So, you know, you want to do it when the market is down, not when the market is slamming into resistance, right? So I did it here at this point. So when we first entered a bear market, the market had tanked all the way down, and I sold the cash secure puts around here, right? So you want to wait for a red day, or at least a red streak, and when the market looks like it's bottoming out, that's when you want to sell those puts. And you want to take a look at the strike prices and what they're paying you. So those cash secure puts that I sold, I mean, they were going to give me these stocks at ridiculous prices. So I sold the 135 on Apple for 10.25. That means that if I got assigned 100 shares of Apple, they would have been 125, less than 125 bucks. Microsoft, I would have been assigned at 205. The triple Qs, I would have been assigned at 240, and Tesla would have been assigned at less than 400 bucks. So, you know, you want to basically get to a point where you are stealing money for those cash secure puts. And if you are assigned, then you're getting the stock for a ridiculous price, right? So yeah, hopefully that answers your question. If you're asking when you should DCA, then you really don't know what DCA means. Bro, what was your biggest regret of a play that you didn't enter? That I didn't enter? Let me think about this. That I didn't enter. Um, I can't remember. I don't know. Honestly, I don't know. No. I don't. The reason I don't know is because I don't really keep too many of those in my mind. You know, you want to move on. There's always going to be another trade. You want to move on. Um, and have a short-term memory. Just like, you know, if you're playing basketball and you're having a bad shooting night, you want to have the shortest term memory possible, right? Guys, yes, hit that thumbs up. Thank you, Jobin. I don't know, Doc. I'll hit you up on the Discord about it if I remember. I'm sure there's a couple, but I'll hit you up on the Discord if I remember. There was one where I wish I sized heavier because my conviction was really, 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 really heavy, and that was the Facebook puts from this year. So if you remember, like those, I think went up like, I don't know, close to 1,000% or something. It was crazy. But I think, you know, even though I did enter them and I made good money, that was one where I was like, shit, I could have easily went heavier on the position size. The NASDAQ is not in the bull market now. Do you need 40% margin requirement for options trading? No, you don't. As I've been saying for about 7 months, we'll have a nice rally into midterms. Yeah, I mean, we've had a nice rally. What happens from here, I don't know. Could be choppy. What do you think of doing wheel strategy on triple Qs? If now it's at resistance, what's the next good entry price? I don't, again, this is not the time to sell puts. How do you confirm that resistance has held or broken? You look at it, the end zone. You look at it. Can I get into the Discord by having the options course already? Leonardo. Unfortunately not. Beto Aguilar. What's up, Beto? Dixie looks toppy. Yeah, it does. Dixie definitely looks toppy. Create the bridge for Metaverse and then charge others with 30% interest like Apple Store does. I don't know, Abram. I don't know. I think the Russian pipes freeze us. Technicals won't come to the rescue. Do you have Baba in your portfolio? Definitely not. Do you expect a bullish rally? Oh, okay, I already answered this. Why are you sure that Tesla will go down after the split? Why am I sure that Tesla will go down after the split? I'm not Nostradamus, man. Who said I don't have to be right? But check this out. And it's because we played the Amazon split the same way. It was like one of the easiest trades of the year. Look at the Apple split, right? Let's talk about mega caps here. Apple went down 25%, literally the day it split, right? Let's look at Tesla split. Tesla went down literally the day it split last time. Tesla went down 33%, right? So Apple went down 25%, Tesla went down 33%. Google, let's look at Google split. Google, after it split, went down only 9-ish%, right? Let's look at Amazon, but it still went down. Amazon split. Amazon went down 21% the day after it split. Let's look at Shopify. Shopify, after it split, the day after it split, Shopify went down 23%. So every single one except for Google, which also went down, they've all gone down more than 20%. Tesla more than 30%. So I don't know what else to tell you. You want to buy on the day of the split? That's fine. But history tells me not to. So up to you. All right, let's see. I missed. Hanny says, do you think inflation will ever go down to 3.3 to 4% in the next decade? In the next decade, yeah, I do think that, but it, you know, it might take a recession or two. Does the audio keep cutting out for anyone else? Oh, let me know. I didn't know the audio was cutting out. Are you long after the CPI data? I'm not long or short. Right now is a no-go zone for me, and I day trade every single day. We send out this watch list every single day. Admittedly, I did not send this out today because I'm doing the stream for you, but we send this out every single day. So we have the call side and we have the put side, and we buy calls above a certain price level and puts below a certain price level. So every day, this allows me to remain neutral and then trade the trend. I don't have to guess whether I want to go long or short. So yeah, and again, I mean, if you want access to the day trade watch list, the weekly stock market update, the chat with thousands of traders, the Zoom calls with me, the ever popular options course, the day trading course that we just launched a few weeks ago, link is in the description, so sign up. But yeah, I mean, like, if you look at these, most of the trade wins here, these are all due to the watch list, the day trade watch list that we send out. But yeah, so I don't particularly think that we're going to be bullish or bearish here. I just think that we could see volatility until the Fed decides whether it wants to go easy, in which case I think the market will absolutely rip, or the Fed wants to continue with an aggressive course, in which I think the markets will have another drop. Whether we get below this low here or not, the June 17th low, I don't know. And I don't think anybody can tell you, but it's clear that right now, you could see that the market is pricing in that the Fed goes a little easier, with 62.5% of traders thinking that the Fed's only going to raise 50 to 75 versus 75 to 100. So why not just sell the day of Tesla split? Yeah, that's what I'm talking about. Is it better to play earnings a week before since lower IV? No, the IV is already baked in. The forward IV is already baked in to the week of earnings. How many questions do you give until you... How many questions do you give until you don't answer? I don't know. I want the options watch list alerts. Click the link in the description. Why not sell to... I already answered your question, Arturin. Are you picking up any Nvidia? No, not at the moment. Nvidia was hit hard because they came out ahead of their earnings and said, hey, look, fuckers, our revenue sucks, so don't count on us to surprise you. Now, it did tank 10% since then, and it's up 1.5%, but it reports earnings August 24th. So, you know, I can afford to wait another couple weeks to see what's going to happen. You know, if you can get Nvidia, and Nvidia is still overvalued at 173. I think it's trading at, how many times earnings is Nvidia trading at? Let's see. It's got terrible valuation. So it's trading at 35 times earnings still, compared to a sector median of 18, right? So yeah. Respect, Z. No worries. You're a beast. Appreciate it. The trading county is blah blah blah. When is Tesla splitting though? August. I mean, can't you Google this stuff? When is Tesla splitting? There you go. What the fuck? You couldn't just type this into Google? It's as big as day. There you go. Jesus. Let's see. Playing Bumble earnings. I don't think Bumble has enough liquidity, to be honest. So, no. All right. Let's see. Are you going to buy puts today? I do have a hedge against the SPY that was up. I think it was up close to 20%, and then I just left it open for today. It was a hedge, right? So either the market was going to do well and my portfolio was going to go ham, or the market was going to tank and I would make some money back on the hedge. You never want to position size your hedge, you know, to a point where you're rooting for your hedge and you're not rooting for your portfolio, right? So Am I going to add puts? I don't know if I'll add puts today. It's still young. It's an hour into the market. I haven't really taken a good look at the market since it opened because I've been doing this live stream. But after I get off, I will definitely hit up the Discord and do a more deep dive into the markets and what plays I'm going to make. How do you feel about Coinbase? Thinking about adding it to my position. I don't like it at these prices, honestly. Does Safari also tell me when Tesla will? What's up, Shafiq? How you doing, man? Coinbase to me, I don't, yeah, I don't want to add here, honestly. Price looks shifty. They completely blew earnings, not in a good way. A lot of consolidation candles here. Even on the update, there was so much selling pressure. Like it went from 115 all the way down to 88 because of all that selling pressure. It's not a good stock in my opinion, to be honest. Let's see, what is Roblox doing? Oh, nice. We have the 45 puts on Roblox. Let me see if those are up. So it ended up, I think they're down 9%-ish, the Roblox puts. Yeah. All right. But Roblox, I mean, this pattern here, it looks like we got rejected at a double top. They crapped out on earnings as well, and it looks like Roblox has a chance to fall at least back down to the 37-ish level where it was after hours. So all right, let me get back to some of your questions. Is an iron condor for the rest of August a good idea? It depends on your strikes. How old do you have to be to enter the Discord? It's for my daughter. Honestly, Yesenia, I would say that I don't want to discourage anyone from entering the Discord, but it comes with a cost, and I wouldn't want you to pay for a resource that might be a little too advanced. So yeah, I mean, there's obviously no age limit. There is an age limit to, I think, what platforms allow you to enter, I mean, to open up brokerage accounts for your kids. But yeah, I wouldn't want you to to spend money on something that might be a little too advanced for your kid, honestly. Um, mm, 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 mm. All right. I think your core is going to be the best investment as you are more real than Meet Kevin. Yeah, I don't know him personally. I know that he started off doing real estate. He's not really a stock market person, but I don't know what his course is like, so I can't speak to it honestly. I see the PE ratio is 102. Do you think Tesla will go down? Well, Tesla and PE ratios don't make sense. To be honest. Tesla cannot be valued. Tesla cannot be valued by traditional metrics. So yeah, I don't think PE ratio matters when it comes to Tesla. What were the CPI numbers? 8.5% year over year versus 8.7% year over year. This was the expected. This was what it came to be. So a little less than that, right? Is this rally going to last? I personally don't think it will, but it doesn't necessarily mean that I'm bearish. I do think we will see some up and down action until September 21st, in my opinion. But yeah. All right. Is QQQ resistance always the same as the companies inside the ETF? No. You're talking, so the companies in the heaviest weighted companies in the ETF, in the QQQ ETF or in the SPY ETF will kind of mimic the pattern of the index, but not exactly, right? But there's only a handful that are at the top of the SPY and that are at the top of QQQ, and most of them are the mega cap tech stocks plus Tesla, right? So, Eddie, I appreciate you answering my question. No worries. All right, guys. Well, it has been over an hour. I appreciate you. Please do me a favor and hit that thumbs up on your way out. It helps the stream, helps other people find the stream. But summary, the CPI came in less than expected, 8.7% expected, came in at 8.5%. The core CPI came in at 5.9% versus 6.1%, so 0.2% less on either side. The Fed funds futures are now pricing in a lower rate hike, 50 to 75 basis points versus 75 to 100 basis points. And yeah, in my view, I do think the markets from here until September 21st, at least, which is when the next FOMC meeting is, will probably, aside from any black swan events or any major news stories that obviously we don't know about, I do think this is a recipe for the market going up and down, being choppy until then. There aren't many catalysts that would drive the market significantly higher. And there aren't many catalysts that would drive the market significantly lower because everything is priced in. And we are waiting for the 10-year and 3-month to invert, which right now we are at 0.12, which is crazy. And yeah, if we get below 0, it will be an official inversion, and we will be that much closer to a recession. It doesn't mean we will hit a recession immediately, but it's almost guaranteed that we will be in a recession within a few months if this inverts, if we're not already in one. I guess it depends on who you ask. But yeah, I appreciate you guys. Thank you guys so much for joining. Hit that thumbs up on your way out. For those of you that are in the academy, I will see you in a few minutes. I will send out my trades and give you my thoughts and everything. And for those of you that want to join the academy, hit the link in the description. Schedule an appointment with one of our ambassadors because the open signups are closed. But I appreciate you guys. Stay safe out there, traders. Peace.